Welcome, everybody, to another episode of the Gold Silver Bitcoin Show, brought to you by the GoldSilverBitcoin.com store. We are more than honored to be sitting down today with Dave Kranzler. Dave is on Twitter at /InvRes Dynamics, INVRES Dynamics. That's short for Investment Research Dynamics, investmentresearchdynamics.com, where his work's at, as well as he is the publisher of Mining Stock Journal and Short Sellers Journal. Thank you so much, Dave, for joining us today.
Thanks for having me on, Justin. It's good to be here.
Pleasure's all mine. So now you've become known as a gold guy to a certain extent, and obviously gold is taking center stage now globally, especially not only as the macroeconomic situation becomes a little more dire, but also as the geopolitical situation becomes a little bit more volatile. And some headlines that are today's headlines include that a top Putin aide predicts global famine by the end of this year. That has something to do, I guess, with Ukraine being the breadbasket of particularly Europe, but also the world. He said, the aide, that developing countries would particularly feel the pain there, the hunger pangs, I suppose. And then a 76 gas station chain in Washington state has reprogrammed its gas pumps to state $10 per gallon gas.
Wow.
Housing is very hot right now. And of course, that raises the question of what will it look like when that slows or turns around? Wheat prices are expected to surge. Dave, I guess, how's it going in Colorado, I believe? Is that where you're at?
Yes. Golden, Colorado.
We're at in Colorado.
Golden, Colorado.
Oh, Golden, Colorado. Got it. Of course.
People who follow mining stocks and know, management of mining stocks. It's the home of Colorado School of Mines, which is probably one of the most well-respected engineering and geological, petroleum, chemical, et cetera, engineering schools in the world.
And I believe is that in part funded by the Colorado state government?
I think Mines is a private school, but I'm not sure. I don't know. To tell you, you know what? That's a good question. I mean, having grown up here, and I used to occasionally I'd go to Colorado School of Mines football games with my father. I think it's private.
So it says the Colorado School of Mines is a public research university focused on science and engineering. Now, the only reason I know that is because I know a company based in Fort Collins named, it's called Prospectors Gold and Gems, I believe. And they have essentially historically been a retail operation. However, they began, I guess, minting their own gold and silver and selling it under their brand, and then ultimately bought a mine. And I believe, I'm not sure where they bought the first mine, but some subsequent mines in Colorado they were looking at were owned by Colorado School of Mines, and they were selling them off, these certain mines.
Interesting.
And so I came across the Colorado School of Mines through a gentleman named David Emsley, I believe. He's one of my favorite entrepreneurs out there right now. He's like, some people look up to celebrities, maybe. Like at this point, I'm just going to look up to this guy who runs a small business, a retail shop, that is like flipping gold and silver, to now minting it. So maybe that meant sourcing gold and silver somehow, some way, to ultimately owning a mine and mining it and then selling it to the retail public and probably doing some wholesale. And David Emsley, so he was talking about the Colorado School of Mines. But I guess, from your view there in Colorado, how would you characterize this period of time we're living through today?
Oh boy. I mean, the simple thing to say is that the central banks led by the Fed blew just an asset bubble of historic proportions, not just a stock bubble, not just a mortgage and credit bubble like we had in the first decade of this century. I mean, there's been prior stock bubbles. I mean, this is like an everything asset bubble, except for precious metals, of course, and commodities. So, and I think that's about ready to switch around. And I think what we're seeing is the massive popping of the financial asset bubbles. That's what I, that I think it's important to differentiate between financial assets and hard assets, right? So gold and silver, real gold and silver, not like SLV or GLD, real gold and silver that you can hold in your hand. Those are hard, real assets. Financial assets are the creation of a fiat currency based fractional banking system, monetary system. And that's what we have. And that's what we've had. I mean, I would argue we've probably had it since at least 1934, when the Gold Reserve Act was passed by FDR, but certainly since the Bretton Woods Agreement. I mean, that was kind of a thinly veiled, not gold-backed monetary system agreement that was agreed to. So, and then obviously everything was thrown out the window in 1971. So the financial assets they're basically just financial creations that Wall Street banks create and push around and skim a fee off the top every time they trade them. So that the financial asset bubble is imploding right before our very eyes, and it was bound to happen eventually. All bubbles pop. So that's the way I see things right now.
Are there any parallels in U.S. history that you see to this asset popping? This asset bubble popping?
Again, it's because let's just say, for sake of argument, you could actually even say the system was turned on its head going back to when the Fed was founded, 1913. But so 1929 was a stock bubble, but the world was still on the gold standard. And so it was kind of just confined to stocks. I mean, margin debt was out of control back then. And I'd have to go back and check, but I think they might have been printing money after World War II to try and get things going again. I mean, World War I to get things going again. But we've seen various types of bubbles, like the stock bubbles over history. The early 2000s bubble was somewhat of a stock bubble, but it was mostly a credit market bubble and a mortgage bubble, and that's what fueled the housing bubble. But now it's like everything, and that's because the central banks have held interest rates. They've printed so much money and held interest rates artificially low for so long that, I mean, when you have a zero Fed funds rate, the banks borrow money from the Fed that the Fed creates. They borrow that for free, and then they go and they transmit that out into the financial system, and it ends up in the stock market. It's ended up in the housing market. Obviously, there's been just a massive bond bubble. I mean, when you have official inflation running at 8% year over year, but really and truly real inflation is more like 16-17%. And I'm just falling back on John Williams' shadow stats CPI alternative measurement, which is how they measured inflation in 1980. And he also does a version that when using the 1990 methodology. But so essentially, you've got negative real interest rates. So if you borrow money, if you're a bank, you're borrowing money at zero, you're basically getting paid to borrow that money with negative real interest rates. So when that happens, you go and you throw it around recklessly. It doesn't cost you anything. And then, compound that with the fact that these banks can operate without any fear of going bankrupt, because all of their malinvestment, when it goes bad, the Fed prints money and bails them out. So, and that's why things perpetuated after the tech bubble crashed the way they perpetuated, and after the 2008, 2009 great financial crisis, which really, if you look under the hood, it was a de facto financial system collapse that was saved by the Fed and the trillions that it printed. So no, it's not unique in that we're watching a bubble implode, but it is unique in that it's a bubble that's infected every financial class of asset. And I include housing in the bucket of financial assets because most people, I think it's something like 80% of all home buyers. I think it's 90% of new home buyers, and a little less than 80% of existing home buyers use a mortgage. And most of those mortgages over the last 5 or 6 years have been 3% down payment mortgages. So that means your ability to pay whatever the price is for a house is predicated on your ability to get the size of mortgage that fits the price. And so in other words, it's the financialization of the housing market, and that's what we've seen, and that's what's created the bubble.
And we see that according to a Zero Hedge article published, written by Michael Masika and Jan Patrick Barner from Bloomberg, that indicators of market bottom is still missing, that the Fed has bailed out the market in the past when we've seen these circumstances arise. And many people think that we're seeing diminishing returns in terms of the money printing and the bailouts. You've tweeted recently about Tesla some, and we saw Tesla removed from the ESG index. Musk actually flatly stated that this was essentially for political purposes. Morgan Stanley is souring on Tesla's coming Q2 results. Everybody's souring on Tesla now. And you asked just 30 minutes ago on Twitter if you knew who essentially held the shares that Musk pledged to help fund the deal. What's your thinking there by asking that question?
Well, I mean, he's pledged a certain amount of his shares to back the loans that he's taking out from these banks in order to help finance the takeover of Twitter. And so I was just asking, from just from a mechanical standpoint, was that transaction already put into place? So in other words, did he already pledge his shares that he needed? And I forget what it was several million. I want to say maybe 9 million or something like that. I don't know. Or he sold 9 million to raise cash to help fund the equity layer of the takeover. And then he pledged shares, and I can't remember what the amount of shares that he pledged. I actually haven't been able to find anyone who can give me a straight answer on exactly what the various financial pieces are that are supposed to fund the 54.20 a share takeover. Notice make sure he gets the 420 in there. So I was just wondering if mechanically, from a back office standpoint, have the shares been transferred to the custody of the banks who are going to lend against them as part of his financing package? And I don't know the answer to that. I mean, I was a junk bond trader when I worked on Wall Street, so I never really saw the back office mechanics of an M&A deal.
There are some images, and I saw one pop up on LinkedIn regarding.
Just one more
Yes,
with
please.
respect to that. The reason why I asked that question is Tesla stock is down over 10% right now. It's down $73. And I believe when he announced the deal, I think the stock was trading around, I know the 9 million shares he sold was around, averaged around $900 a share. And I forget what the pledge price, when he said he would pledge the shares, I want to say the stock was probably around $850 or so, plus or minus $20. I don't remember. I'd have to go back and look. But now, I mean, in order to take out the same amount that he had originally pledged, the market value amount, he'd have to pledge a hell of a lot more shares. So that's why I was asking. At some point, he's going to run out of shares that he can pledge, because he's already got shares pledged against other loans. There's I guess the Tesla, the Tesla Corporation has I think banks will give him 20% of the amount that he pledged, or he can pledge up to, maybe it's 20%, but according, the Tesla bylaws allow you to pledge only down to 25%. So margin. So I was just curious, to see. I don't think the Twitter deal is going to go through said they're certainly not going through at 54.20. And I'm not really sure it was ever Musk's intent really to take over Twitter. I think it was, in my opinion, it was partially a cover to sell the 9 million shares that he sold, because now he has that cash. And you know, if you use taking over Twitter as the excuse, it's not like you're outright selling shares of Tesla, because you see from behind the curtain with the inside books that the operations are starting to deteriorate quickly. And then I also think it was a way to distract everyone's attention away from what's really going on behind the scenes at Tesla and focus on this Twitter nonsense. So that's why I don't think he ever went into this with the intent to actually take over Twitter. And I just laugh at the people who think that, you know, he would make sure that Twitter is a 100% free speech social media venue. That's a bunch of BS.
Let's stay here for a bit because it's a hot topic and you have a contrarian view here. That's for sure. I guess a lot of people are hoping that Musk at the very least means well. He might be an opportunist, but obviously Twitter many people are dissatisfied with the running of that company. And there's been a lot of interesting information that's come out in recent weeks about Twitter. And a lot of that is actually, I suppose, because of the pressure that Musk has put on Twitter, but probably more accurately, he sort of shook things up and now a lot of things have come out recently. So what comes to mind, for instance, is what percentage of Twitter users are bots? Twitter maintains in public filings that less than 5% of the users or 5% are bots. I believe it was less than 5%, they argue. And Mr. Musk posted a tweet recently where essentially there was himself as an astronaut looking at Twitter, and behind him was the board as a bigger astronaut, and they had a gun to his head. And Musk is saying it was all bots all along, or I guess he's saying it's all bots, and the Twitter board saying it was all bots all along, or something to that extent. And so that is interesting because it's increasingly become accepted that Twitter is the public square. And so now there's kind of the lights are on at the public square and everyone's kind of staring around looking at each other. In terms of his potential purchase of Twitter, I pulled up a list of potential investors or funders, financiers, which according to news.bitcoin.com is from the SEC. So it includes equity investors of AM Management and Consulting, AH Capital Management, Bamco, Binance, which is a crypto exchange, Brookfield, Fidelity Management and Research Company, Honeycomb, Key Wealth Advisors, Lawrence J. Ellison Revocable Trust, Qatar Holdings, Sequoia Capital Fund, Strauss Capital, Tresser Boulevard. These are just some of them. Witkoff Capital. And so now in terms of the shares, you know, I have a feeling that with his play here, with if he is seeking to purchase, with him revealing that there's more than 5% bots on Twitter, is looking to knock that 54.20 price down. But I'm interested to hear your thinking about maybe his true motives, his ulterior motives, that perhaps him purchasing Twitter because, as he puts it, it's become too radical and should be viewed as more neutral, as well as, of course, a profit motive there. There is a profit motive there, from what I can tell. The thing about Silicon Valley is that these people are very good at raising money, but they're not very good at running businesses. Generally speaking, they don't run businesses based on income and revenue and net profit, but rather just on how much they can raise in the next round, diluting themselves, forcing them to sell the company long after the company had become a shell of what it was initially intended to be, oftentimes in many cases, I think. Now, why do you think that Musk has these ulterior motives, and why are you taking this contrarian take?
Well, I don't know that's necessarily a contrarian take. I mean, I'm not the only person who has the view that Musk really never intended to take over Twitter. It was more, like I said, it was a venue for him. It's a way for him to sell shares in Tesla which he did, 9 million, which is, substantial amount. If he just sold 9 million shares, if the Twitter thing never came up and he just did a filing for 9 million shares, it would have just annihilated the stock price. And he knows that. I mean, he got 900 a share on average for the shares he sold, and now it's almost down to 600. So, that's a close to $2 billion savings versus where the stock's trading now if he had to sell shares now. And like I said, it was also, it helped create a giant smoke screen around what's really going on at Tesla. My understanding is that the Berlin factory is a total shit show right now. It's not even remotely close to being complete. I mean, they're still trying to produce a minimal amount of cars out of there, but it's not even close to what it was supposed to be at this point in time. I haven't heard anything about the Austin factory. What's the status of that? That was supposed to be up and running by now. It's supposed to be turning out Model Ys. It's not turning out anything. And then Shanghai, the Shanghai operations have been devastated by the COVID lockdown that they implemented over there. And so, I mean, he's losing hundreds of millions a week in revenues because of that. And, Tesla's, I mean, if you've really dug down deep into Tesla's financials the way I have, its financials, its financial condition can't withstand that. So, and I don't even want to get into the accounting fraud that's embedded in Tesla's financials. So, people who think that Musk had good intentions with taking over Twitter are naive. And they're probably the same people that believed that he was going to produce. Remember, he said he's going to do 1 million robo-taxis by 2020. Well, where are those? Now they're supposedly coming in 2023. The electric semi was supposed to be in production last summer. Where's that? That's not even close to being in production. It's nowhere. The cyber joke, the cyber truck. What about that thing? I mean, when he did the initial debut of the prototype of the Cybertruck, and he claimed that the body panels could not be dented and the windows were shatterproof, and then he had that kid bang the side panel with a hammer and it dented, and then the kid threw whatever it was, maybe a baseball or a lacrosse ball at the window, and it shattered the window. I mean, to me, that just exemplifies exactly what Musk is. He's full of hot air, and everything he does is catered to enriching himself. He doesn't care about humanity. If he cared about humanity, he wouldn't put his automatic pilot Teslas on the road, because it's killing people. There was another lawsuit or another investigation into a 3-person death in California by the California Department of Transportation, I believe, that was just announced yesterday. But there's been dozens of people killed by Teslas that are on autopilot that don't work. It doesn't work. So if he's a misogynist, if he cared about humanity, those vehicles would not be on the road with autopilot with flawed autopilot capabilities. So, and the list is endless of the lies and deceit that people have bought into for Musk. And it's like, the people who are his lemmings, it's like watching Lucy hold the football for Charlie Brown, and they keep trying to kick it, thinking that this will be the time that the football doesn't get pulled away. And yet it gets pulled away. Well, to me, this Twitter BS, that's another situation where Lucy's going to pull the football away.
The most recent situation, I think, is the Dogecoin market action, we'll call it. Now, what was your take on that? And let me know if you need me to kind of go over the brief history first.
Oh, I know the history intimately. First of all, I assume by the name of your channel, you're probably a Bitcoin or a crypto aficionado.
I will say that, so Bitcoin and crypto are defined increasingly as two separate things. And so that is kind of the view of this show in particular. So this is gold, silver, Bitcoin.
Okay, so let's not even get into that. But my view of these cryptos is that, and if you look, Bitcoin has about a 85% correlation with the NASDAQ. So to me, the cryptos, there's a whole list here on investing.com that I'm looking at. The cryptos are just mere instruments of speculation and bubbled up the way everything else bubbled up. I mean, yeah, do they have value? For now, they have value because there's people out there willing to pay a certain amount for each of the cryptos on my list. But
so like
look what Musk did.
let's I just want to
Musk took
say,
a huge position in Dogecoin, and then he announced that he had a big position in Dogecoin, and he might start, Tesla might start accepting it as payment. Dogecoin went to Pluto, Musk sells, and now it's down at 8 cents. So you tell me what was going on there. He's a hype artist. He's the greatest grifter in the history of the planet.
he went on SNL and the price crashed. That's what happened.
Because I forget what he said, but it was going to crash anyway. It didn't matter.
Was that not a classic sell the news situation?
Absolutely. Absolutely. God bless the people who were able to get into Dogecoin early and sell it when Musk unloaded his.
Now, just
But
as an
it's like
aside,
he sits on Twitter and he toys with people, and that's what he does. He's a sadist. He's a misogynist and he's a sadist. And people who think he has good intent are just, they're either naive or just stupid.
he's trending on Twitter right now, and some of the trending topics include that Tesla lost its top spot in Cathie Wood's flagship fund. Elon Musk's firm was top ARKK position on most days since 2017. Roku has now taken that spot. There's apparently a Tesla documentary coming soon, and it's called Elon Musk's Crash Course, and it raises a skeptical eyebrow towards Tesla's vaunted autopilot feature. Now, of course, there's a lot of, here's another one. Twitter bots helped build the cult of Elon Musk and Tesla. A substantial percentage of the accounts that support Elon Musk and Tesla are known bots under investigation by researchers for possible stock manipulation, and many are programmed to attack critics. SpaceX paid $250,000 to settle sexual harassment accusation against Elon Musk. The SEC is the SEC unconstitutional? Now, I guess for some reason that is here, but it's an interesting question. That is not the topic we're discussing now. Now, that was just what's trending, top trending on Tesla right now as we speak in the US. Now, Elon Musk's most recent tweets are like Starlink, 19,000 unconnected schools to be connected in rural areas. They might not necessarily want to be connected. Now, then the attacks against me, quote, the attacks against me should be viewed through a political lens. This is their standard despicable playbook, but nothing will deter me from fighting for a good future and your right to free speech. And then he says he's spending less than 5% of his time on the Twitter acquisition, that he was in Texas doing some stuff. He now rocks a cowboy hat, actually. And I'm from San Diego, California, in Idaho now. And he does give me hope that one day I can also rock a cowboy hat, being kind of a Silicon Valley light as he is. Dave, I guess before we move on from this viral topic, or do you have any kind of concluding statements about, I guess, Elon Musk's empire and his Twitter bid?
Well, I'll tell you what, rather than reinvent the wheel here, everyone who watches this should go to E.W. Niedermeyer's Twitter thread. He's a journalist, and he wrote a book called Ludicrous: The Unanswered Story of let's say the unvarnished story of Tesla Motors. Okay, so, and he went and he looked under the hood very, very deeply, and his Twitter feed is at Tweetermeyer, Meyer, and he put a long thread discussing a lot of the things that I brought up about, the bullshit Musk has pulled in the past, and that this Twitter thing, he doesn't mention this about Twitter, but the Twitter stunt is just another in a long list of things, and a lot of it is cataloged here in this guy's tweet thread. It's, if you want to get a quick education on what Musk is all about, go to Niedermeyer's Twitter thread and read what he posted today. It's phenomenal.
Can you summarize it a bit?
I mean, it's long. I mean, there's just, I wouldn't do it any justice summarizing it. But he basically, I guess the real brief cliff notes are that, that everything that I just said about Musk, that he's a supreme grifter, the best in the history of the planet, is basically, what this guy is writing about. And he gives many examples that prove that point.
Now, of course, in the wider stock market and economy, there's also lots of news to cover.
And just so you know, I mean, I've been following Tesla on a daily basis, in depth as possible, with public documents that are made available, and also following all of the other people who do in-depth research on Musk. I've been doing that since probably mid 2017. So, I mean, if you look at Musk and examine him closely and examine Tesla closely through the lens of truth, you see a completely different picture than what the myth is about Musk. And that's basically the point of this tweet thread from E.W. Niedermeyer.
So at Zero Hedge, there's an article talking about how the S&P 500 plunges 20% from record highs, and it's saying, it states, having tried and failed twice before in the last week, the S&P 500 has broken down below the Maginot line of 38.55 and officially entered bear market territory, trading down at its lowest since March 2021. It argues the next stop is 38.15. That's a Fibonacci 38.2% retrace of the post-COVID rally. What's your view on the slowing that we've seen over these recent weeks, kind of in the wake of inflation becoming part of the popular consciousness, and also Ukraine, the situation in Ukraine?
So I've been arguing, and I make the case all the time in my Short Sellers Journal newsletter, that for, say, 80% of households, 80% of the US population, this country's been in a recession since summer of 2021. And that was, essentially, you can see, I look at the economic data weekly, because I write about it in my newsletter. I do an economic data summary of the important economic data. And you could see a lot of hard economic data starting to roll over in July and August of 2021. And that's about the time that most people had used up the most of their second stimulus handout. And so, and then you look at like the consumer credit numbers, and you see a massive spike in the use of credit card debt this year. And for me, that's people who are using their credit card to make ends meet. They're not, and we saw with Walmart, the results this week from Walmart, Target, Kohl's, Ross stores, we saw that people have stopped buying discretionary items. Now, I'm not talking about the upper 5% or the upper 1%. They're not feeling recession. Most of them will at some point, and probably at some point soon. But there's people who are rich enough out there and have enough cash and hard assets socked away that, regardless of what happens to the economy, they'll they won't care. So, and then that the housing market the numbers started softening up the same way last summer. Now, the new home sales numbers, it's hokey reporting, and there's always massive swings in their revisions that don't make the headlines. But you can see it in existing homes. And a big part of the problem is the price inflation that's been created from the massive amount of money that the Fed has printed. And that's what the real definition of inflation is. It's the inflation of the supply of money in excess of the amount of wealth that a system puts out to back that money. And that's what we've had since 2008. But now you're getting to the point where, well, first of all, yeah, the supply situation has affected the auto industry. I mean, the US economy is basically, a three-legged stool. You got consumers are 70% of GDP. And then you've got the housing market and the automobile market. Those are, and I'd say probably now, because they spend so much on defense contractors, you probably say the defense industry. That's your main pillars of the economy. And you know, even though tech gets massively high bubble valuations, the amount of the GDP that's attributable to tech is smaller than people would think. So what's happened is you've had, because of price inflation, and it's you know, it's been, the situation has been exacerbated by this, you know, supply chain situations. But you've had, you know, the price of automobiles is now becoming out of reach for most people, most households, believe it or not. I see it in the numbers. And certainly the price of housing has gone, you know, well beyond the affordability of you know, 80% of households, and especially potential first-time buyers. So, I mean, essentially, the Fed created this Frankenstein, and it's off the chain now, and there's no telling how bad this is going to get.
Craig Fuller, CEO at FreightWaves, writes, supply chains are never returning to normal. The conventional wisdom at this time is that most of the world has moved on from the pandemic, except for China. Therefore, supply chains will return to normal. Unfortunately, this is not the case. The world has permanently changed, and supply chains are going to face continuing challenges for decades to come. I might add that Bloomberg calls this recently in an article, I believe, the age of scarcity, I believe was the term they used. Among those challenges, our supply chains will remain under constant threat of disruption for the next decade. Supply chains operate best when the world is peaceful and stable. A smoothly running supply chain requires buffer stock, which is challenging with declining population demographics. There's a conflict between environmental, social, and governance goals, ESG, and supply chains optimized for cost and speed. If we prioritize ESG, we will need to contend with supply chain risks. Supply chain technology will become the big venture capital category winner as companies continue to make investments in technology that can help them mitigate their supply chain challenges. So that's I think, symptom or a sign that we're heading in a certain direction. The trend is a trend, and it's not going to reverse anytime soon. There's no signs of it reversing. What opportunities are there in this new Frankenstein economy, Dave? And what are you writing about them in your publications?
I mean, when you say opportunities, you mean, you know, where can you put your money to make money?
Or if you've got some good like garage selling tips, like going to garage sales and flipping stuff.
I mean, here's the problem. You know, most households, you know, let's just say the 80% of all consumers have stopped buying discretionary items. They're buying necessities because that's what they can afford. They have to worry about keeping their car gassed up so they can, you know, get to work, or, you know, even if they work at home, you know, you need a car, especially in the suburbs, the way our whole society is set up. People need cars when you live in the suburbs. You know, the public transportation where I live is, you know, bad at best. So, and then they need to be able to continue paying for the roof over their head. So, you know, I was looking at data earlier this week, auto loan delinquencies among subprime borrowers, which is a large percentage of auto buyers in recent years. The delinquency rate on those loans is at a high going back to, I believe, 2009. So you got the delinquency rate there ratcheting up. You know, we had a moratorium on mortgage payments and foreclosure after the pandemic episode, and so, you know, the stress in the mortgage market from delinquent payers and the potential for foreclosure has been absent, and I think you're going to start seeing that kick in. So, I mean, I guess my point here is that, you know, trying to flip stuff on eBay or out of your garage, I don't know that that's going to get you anywhere, because who has money to spend on that type of stuff? So, you know, there's a 10%, the 10%, upper 10% demographic is still comfortable, but I can guarantee you that there's a lot of people, just the average household is, and you see it in sentiment surveys, you know, the average household is uncomfortable with their financial situation right now. So, in my opinion, right now, you should be more concerned about the return of your money than on your money when you're looking at, oh, I got this cash I'd like to invest. Where do I put it? So, and for me, that means precious metals, physical gold and silver that you safe keep yourself. And I would just hold the rest in cash, to be honest with you.
So now miners, like, okay, so let's leave that off the table then for now. And I guess now I guess I'll give some insights into how it's affected my spending. So we maybe buy fewer types of snacks, salty or sweet, for instance, but we are buying higher quality stuff. And so what's interesting to me about that is that you can't really like rationalize human behavior. It happens for like all sorts of different reasons, and that comprises essentially the economy. And so I find that interesting to see that, you know, we might be spending more on specific snacks, but we would be theoretically buying snacks less. And then now what dictates behavior moving forward is not only the current situation, but also expectations of the future situation. So very recently, we've seen, I think, a lot more people maybe even like look up inflation. They're like, you know, I've been hearing a lot about inflation, you know, for the last month, 10 months, year, 5 years, 10 years, depending on how much one listens. And now it's in their mind, and their expectations for the future might be altered, which I suppose maybe kind of like presents like a feedback loop situation. So now you're seeing that in the numbers with the discretionary spending, perhaps. And my argument is that's not only a sign of the current conditions, but also expectations of future conditions. You mentioned car sales. Now, this is a little bit off, perhaps on a tangent, but now auto loans were like 0% interest. You could essentially just roll up to a dealership and they would give you a car with like zero down and very little interest. What, like, that must have something to do with what's going on in the auto sector. But of course, costs all around are going up at the same time.
Well, that's right. And that's why I mean, to me, the supply chain thing is, I mean, yeah, it's there, but I mean, at least in the Denver area, I don't walk into, when I walk into grocery stores, I don't see empty shelves. Well, I don't go to the baby formula aisle. I mean, I don't know about that, but I don't see empty shelves. I was just driving by a large car dealer kind of near where I live, and their lot looked pretty full with new cars. You know, I mean, I'm sure that, you know, there is for sure supply chain issues. I would actually argue that inflation, the high rate of inflation, is part of that problem, because, you know, if you're a transportation company, you know, you got to balance out, you know, what you can charge for transporting something and what you pay your employees. So part of the problem has just been a shortage of labor, because these companies can't pay enough to attract people to come work for them. But nevertheless, whether there was a supply chain issue or not that affected the auto industry, I think you're at a point now in our economy where people wouldn't be buying new cars anyway. I mean, the rate on an auto loan is a lot more expensive. As you said, you know, I don't know of anyone who did a zero down payment car loan. I mean, I know there were zero down lease payments advertised, but for a minimal amount, you could get a fairly low interest. If you had decent credit, you get a fairly low interest rate auto loan. And originally, you know, you only used to get them out to, you know, 64 months. And then all of a sudden it became 72 months. And then all of a sudden, you know, so they keep extending the maturity of the loan so that it lowers the monthly payment for the person buying the car. It's the same concept as housing. It's a financialization of the auto industry. So, and we're seeing that unwind now. And with interest rates where they are, and car prices where they are, and housing prices where they are, people can't afford to take down a mortgage now. They can't afford to take down a new auto loan right now. Even if they saw a car that they would buy if they had the money to plunk down on it, they don't have the money to plunk down on it. So, you know, and that's where we are. I mean, this economy is, in my opinion, is heading south quickly. and it's going to get worse.
How bad is it going to get?
I don't know. I think it's going to get bad. I mean, I was around when, in the 70s, I was aware of what was going on. I was in my, mid to late teens during the 70s. So I remember that. And then I remember the kind of the recession that we had, say from 89 to the early 90s, and that was actually the result of the S&L crisis and the junk bond. And there was a real estate bubble back then that was partly fueled by the Drexel Burnham juggernaut and the S&L, because the Drexel was really the one behind the S&Ls and all the money that they were raising. And that popped, and we had a pretty severe housing recession in the early 90s. You probably don't remember it, but I was at one of the sectors I traded in junk bonds when I started in 91 was the housing market, housing bonds, home builder bonds. So I got, I familiarized myself with how the various components of the housing market and how it operates. So that was pretty ugly. Obviously, what happened after the tech bubble crashed, we had a brief recession. Greenspan fixed that by printing more money, and that spawned the credit market and mortgage and housing bubbles. So then supposedly the NBER declared in 2010 that there was a recession in 2008 and 2009. So we had that recession, but again, it was treated with trillions of printed money. And you get to the point where there's diminishing marginal returns on each extra dollar that gets printed to try and fix financial based issues. And now we just have one giant financial based issue. I honestly don't know how bad it's going to get. I think it's going to get uncomfortable for probably at least 95 to 98, 99% of the population. And I think it's going to be devastating for a large percentage of the population.
I'm looking at the food insecurity charts on ers.usda.gov. Interactive charts and highlights, the Economic Research Service, trends in U.S. food security. The data stops in 2020. In 2001, it was 11%. In 2008, it was 15%. In 2020, it was 11%. Has not been updated. Now, I look at the barbecuelab.com hunger in America. I suppose we're going to have to assume that these are accurate data. They seem on par. 12% of the U.S. population in May 2022 struggles with hunger. That's about 41 million people. So
I've seen that statistic. Yeah.
I suppose we'll see that increase. There are 38 million Americans that struggle with poverty. Households with children that are headed by a single woman have the highest rate of food insecurity. 16.7% of all children do not know where their next meal is coming from. 22 million children rely on school for their meals. 12% of senior citizens are food insecure. They're on essentially welfare, which is fixed. Poverty is directly correlated to hunger, and the poverty rate is going down. Well, that's certainly been a macro trend. I certainly think 2020 is one of these cataclysmic events that could reverse that. And I think that we're already seeing signs, if not the data. The average monthly income for those who use food assistance programs is $813 a month. The average cost of a meal in America is $3. New Mexico, Mississippi, and Louisiana have some of the highest rates of hunger. So those are just some facts. So I guess, Dave, my question for you is, like, at a societal level, at a national level, like, what solutions can we take to?
I think that we're at a point now where it's beyond like simple fixes, like the Fed printing more money or the government handing out more stimulus checks. I mean, all that does is further devalue the currency, and we have a dishonest system. And for me, Musk is the postcard or the poster boy for the fact that we have a dishonest system. I can guarantee you I can tell you firsthand from looking at the financials intimately over the last 5 years, 4.5 years, that there is widespread accounting fraud embedded in his financials. I mean, he himself is a fraud. Whatever happened to the ventilators he was going to produce during the COVID crisis? Remember that? So we have a completely dishonest society. All the politicians are on the take. It's obvious Joe Biden is as corrupt as they come. The evidence is there. I can't wait till they start unloading stuff from Hunter's laptop into the public domain. I've seen snippets. So, essentially, we have everyone's out for themselves, dishonest society. You can't have an honest system unless you have honest money. And the dollar is fraudulent. I mean, when you can just create digital dollars by pressing a button, that's not honest money. It's not backed by anything. It's backed by the full faith and credit of the United States government. Well, let's look at the true credit condition of the U.S. government. I mean, you've got Treasury debt alone is something like 120% of GDP. I mean, it's a Ponzi scheme, So this is just a giant Ponzi scheme, and there's not a simple, painless fix to this. It's going to get painful for everyone, and there has to be a complete systemic reset. And I don't know what that's going to look like, and I don't know what the other side of that's going to look like. I'm just saying that people need to brace themselves for impact.
Yeah, I suppose two things we could do today are, one, like go to our local city council meetings, if even only to give a 2-minute joke or a stand-up routine. I don't know if you've seen those. And then the other one is to get to know your local farmers, et cetera, local companies, local kind of supply chain, I guess, networks. And then also, I've been kind of ruminating on this, and somebody who I think identifies mostly as like if I had to guess, and I'm putting words in their mouth, is like a New Deal Democrat, argues that like, oh, you're all crying over a little bit inflation, boo-hoo, this could be way worse. We could be seeing deflation. And I believe that the term stagflation has cropped up a bit, and that's something that you experienced in the 70s. I did not. And he argued also that deflation would be far worse than what we're experiencing now. Do you anticipate stagflation or deflation?
Well, first of all, I can't have a conversation with people like that because they clearly have an extreme misunderstanding of what inflation is, what the nature of inflation is. Okay. But if you're telling me that it's better for me to pay more next week for something that I bought this week. So let's say I buy something weekly. Okay, I buy it this week. It's better for the system if I have to pay more for it next week. I bring on deflation. Now you're going to see asset deflation. We're seeing it right now. The bubble's popping. The air is coming out. You're going to see financial asset deflation. Okay. In terms of real deflation, price deflation, you gotta remove all the printed money that the Fed has printed since at least 2020. And I would even go back to the Fed's balance sheet was 800 billion before it started printing money in 2008. And now it's almost 9 trillion. All right. The Fed is holding almost $2 trillion in suspended animation in its reverse repo facility on a 24-hour basis. That's $2 trillion sloshing around the banking system that the banks have nothing to do with. So the Fed pays them whatever the reverse repo interest rate is now. I think it's 0.5% or something. I forget. If the Fed wants to treat inflation, just turn that 2 trillion repo, overnight reverse repo, turn it into a permanent market operation reverse repo and take that money out of the system and destroy the currency. Okay. And then you might be on the path towards price deflation, but you're going to have to take out a lot more than 2 trillion. Now, to address this concept that deflation is worse for an economy than inflation, to be honest, I think everyone is better off if something they buy on a weekly basis, if they have to pay less for it next week than they paid this week for it. That's what deflation would do for the system. It would stimulate consumption, and that's your if you have prices going down for things, that means that you've got a fully competitive system based on an honest currency, ostensibly backed by gold and silver. And the economic system is operating efficiently, and probably largely free from government intervention. And that would be a healthy system. It's the exact opposite of what a New Deal Democrat would think works. Well, we've had New Deal Democratic policies in place since the 30s, and it doesn't look like they're working that well, does it?
Any other comments before we conclude today, Dave?
Again, I just kind of fall back on, a couple things. Don't trust anything that comes out of Elon Musk's mouth. It's like, how do you know Elon's lying? His mouth is moving. With respect to the bot situation, he would know as well as anyone that Twitter has more than 5% of the accounts are bots. Of course it does. I mean, Facebook got caught red-handed with that, fake accounts and things like that. The other thing is, don't try to buy the dip. This is a bear market. Yeah, you might miss a nasty bear rally. Some of the biggest market rallies have occurred in the middle of bear markets. But, don't look at that as a lost opportunity, because the market's going to go a lot lower than it's gone already. So, like I said, it's, to me, the best advice I could give is start buying physical gold and silver, keep it yourself, and get yourself out of the mindset right now that, oh, if I take a little risk, I can make return on my money. No, this is right now, it's the game is wealth preservation. So that's my advice for my parting comments.
Yeah, on the cusp of what looks like another economic bloodletting, Dave Kranzler. Dave, thank you so much for joining us. People can find your work at investmentresearchdynamics.com. Also, you publish the Mining Stock Journal and Short Sellers Journal. Where can people find those?
At my website, investmentresearchdynamics.com, there's links at the top where you can find out more information about each newsletter.
And on Twitter at InvResDynamics, twitter.com/InvResDynamics.
Or just search on David Kranzler or Dave Kranzler, it'll pop up.
12,000 followers. I bet I have a sneaky hunch that you did not buy very many bots.
I wouldn't even know how to do it.
I've seen companies buy like 50,000 bots for insane, like 6 figures. And I'm like, guys, like you guys just bought a bunch of Indian bots. And that is another topic for another time. All right, Dave, thank you so much for joining us today. And thank you everyone for listening.
Thank you, Justin.